Hi, welcome to my channel. Today I want to share with you my updated analysis of Tesla. I already did a video about Tesla back in May 2021, and in this one I'm going to update all the information that we received from the company in the quarterly reports, especially the one for the fiscal year 2021 and the fourth quarter. All the analysis I did in that other video, especially the qualitative attributes of the company, are still valid today, and I encourage you to go and check that if you're interested. I'm going to leave a link here and also in the description. In this one I'm going to focus mainly on updating the model, and so let's get to it. First of all, let me show you some highlights that they publish in the report. So in cash, they have produced a free cash flow of 2.8 billion in the quarter, which is a tremendous increase from the previous quarters. They are now saying that the viability and profitability of electric vehicles is no longer in doubt, and they achieved the highest quarterly operating margins among all original equipment manufacturers, and we're going to talk a little bit more about this in a minute. Then here they mentioned that they generated 5.5 of net income and also 5 billion of free cash flow in 2021, and this after spending 6.5 billion to build new factories. The profitability, 14.7% operating income in the fourth quarter, and 30.6% of gross margin, and 29.2% if we remove the credits. And this is important. They are always talking about GAAP, so General Accepted Accounting Principles. So they are not making any adjustments like other companies normally like to do, to add back stock compensations and other expenses. So I like this, that this is a pure, GAAP operating margin that they're talking about. Also here they mention that the main issue they have is production, in essence. Demand apparently is not a problem. The future, let's say, of the company is going to be dependent on how fast they can increase production. They believe that the competitiveness in the electric vehicle market will be determined by the ability to add capacity. In terms of the operations, they came with a record almost 1 million deliveries and 1.2 million run rate in the fourth quarter of 2021, and all this information we're going to use to update our model. Let me show you now the profitability in terms of operating margins, and using this graph that they show us in the report. You see here in red the operating margin of Tesla, and they show here the rest of these manufacturers. As you can see, Tesla's operating margin is the best, and the nice thing is that it is growing with the scale, while the others are up and down, stagnant in essence. Mainly they have reached already a large part of the scale that they will ever achieve. So this is a good thing for Tesla. It means that the operating margin has more room to grow, I think, while I don't think the same for the rest. Especially because the rest now are in a problem. They have to convert plants that are used for manufacturing combustion engine into electric engines and into motors and into batteries, which is not easy. And Tesla showed that when they bought the plant in California that was owned by Toyota before. And it was a plant made for combustion engines, and the efficiency that plant has is much smaller than the efficiency of the plants in Austin, Berlin, and China that are from scratch thought with electric vehicles and batteries in mind. So I think that here Tesla has an advantage in essence. And if you want to know, these three here are BMW, Toyota, and Daimler, and these three here are GM, Ford, and Honda. But you see, these three are not always the top. One of these three is here in the 2018 quarter. So they are up and down and they are crossing to each other. So it's a very hard business for these guys. While I think Tesla, as I said, has an advantage. And in the fourth quarter, Tesla's operating margin was even higher, 14.7%, much higher than this one. So good news here in terms of profitability. The highlights so far that I've seen: supply higher than demand. So this will be the theme for the next decade. So in essence, as electric vehicles become more affordable, cheaper to run, and better for the environment, demand will be there. And Tesla Model 2, which is the cheaper priced model that they have announced that they are going to build, is going to have a price tag that will democratize the ownership of electric vehicles. What we don't know is now whether 2024 is going to be the moment that they start production or not. They haven't mentioned that, and probably in 2022 they will give more information. Let me show here, related to this Model 2, a retail investor asked the question, how is the progress on the 25,000 compact car, and if they can give some update. And Elon Musk answered that they are not currently working on that $25,000 car. And in a very Elon Musk way, he said that it's sort of the wrong question to ask. And really what's important, he said, is when is the car going to be autonomous? Because when that happens, the cost of transport drops by a factor of 4 or 5. And if this is the case, I think that the number of cars necessary is also going to drop by a factor of 4 or 5, because of course a family will not need 2 cars or 3 cars, but probably every 3 families or every 4 families we will need 1 car or 2 cars, I don't know. So in any case, this is interesting and something to keep in mind. So let's keep moving. The ability to build up capacity fast will be the determining factor for success in the industry. Tesla already achieving better operating margins and cash flow than most original equipment manufacturers, even with supply chain issues, COVID disruptions, raw material increases, and especially for Tesla, heavy investing, because these three are common to everybody. Tesla, being 100% of an electric vehicle manufacturer, has an advantage versus competition. So these are the highlights I can see. If we go to deliveries, this is the 2 graphs that they show for the quarterly and for the trailing 12 months. And you see how fast the deliveries are growing. 60% growth since the first quarter of 2019. They showed us an outlook for volume, and this is what they have to say. They plan over a multi-year horizon. They expect to achieve 50% average annual growth in vehicle deliveries. And also they say that their own factories have been running below capacity for several quarters. So this goes to show the efficiency of the company, because they have reached such a level of profitability that we showed in a few slides ago in operating margins, even without running at full capacity. Let me focus in these highlights on this one, the run rate of over 1.2 million in the fourth quarter, which already means they are going to probably be able to achieve the 50% growth for 2022. And this is the way I see it. In terms of installed capacity, they show this graph, and they say that this is the current installed capacity and the status already in production. So for 2022, this is what I think. The production from these plants or from California plant is going to be 500,000. The one in Shanghai will reach 800,000. And this is already achieved, I think, in December. The run rate in December was already 65,000 cars in December produced in Shanghai. So that gives you, probably it's going to be more than this. And then Berlin and Texas, which are going to start production soon or already started in some of them. This is what I'm estimating, because of course it's going to be the first year when they won't be able to produce at high levels of capacity, but at least 130,000 cars may come from here. So that's my projection, 1.4 million, and I'll show you the projection later, but this is how I think the capacity is going to be distributed. Then in between 2024 and 2025, my number is approximately 3 million of vehicles, and they will have to come from increasing the production in California, increasing the production of Shanghai to approximately 1.2 million, and then Berlin and Texas, not only Model Ys but also Model 3s coming to full capacity, which in each case is approximately 500,000. And also some Cybertruck in Texas will be built here, and of this 500,000. Then it comes the future, let's say 2028 and 2031, and this is where you see 25 million is my expectation, or at least what I am modeling, because I am going to use first the number that the company is aiming for, which is 20 million vehicles to be produced in 2030. So if by 2030 they produce 20 million, by 2031 they're going to produce 25, because the ramp up in growth from here to there will lead that 2031 will be 25 million approximately. So this 25 million will come, they must come from huge increases in California, in Shanghai, in Berlin, and in Texas. You see 3 times the capacity here, 4 times the capacity, the original capacity here, and then 18 million will have to come from somewhere else that we don't know yet, and they're probably going to announce by the end of this year the new, at least a few of the new plants that they are planning to build. So we will have a little bit more of information here, but 18 million from now until 2031 will have to be built in new factories that we don't know, on top of all this expansion on the actual plants that they have. So it's a really a big investment, and also a challenge. And I'm talking here about only cars, and these are the plants where they produce cars, but I have not talked about where they produce batteries. For example, here they don't have the Nevada factory here. That is going to also be another challenge. Then what I want to do is to put these numbers in the context of the market and see whether they fit or not. So let's do that. So I have here a table with projections for the deliveries. I am showing here the global vehicle fleet in numbers and the global vehicle sales, and then the same for the electric vehicles, and the ratio between these two. So electric vehicles to total sales and electric vehicles to total fleet. So let's concentrate now in this, which is the actuals up to December 2021. And this is where the numbers are coming from. This 6.6 million is which is what I have here, electric vehicle sales, global electric vehicle sales for the end of for the year 2021. 6.6 million coming from the International Energy Agency in their global outlook for 2021. In that same report, they said that 16 million electric vehicle cars were on the road worldwide. So this is this number, 16 million, the fleet of electric vehicle cars. And they said in that same report that in 2020 the car sales were 3 million. So this is the number I have here, 3 million, which was 4.1% of total car sales. So this 4.1%, so that gives me the total sales of all vehicles. And then this 6.6 million, which is the one we have here, was close to 9%, in fact was 8.57% of the total sales of all vehicles, so 77 million. Now let's go and check this year, which is December 2030, And I'm going to use this information that I'm going to show you where it comes from to be the target, let's say, and then my projections is going to be going from what we have today to what it's expected by 2030. So let's first start with this Bloomberg outlook for made in 2020, and by 2020 there were 1.2 billion cars global fleet, so this is this number here, and by 2030 they were expecting 1.4 billion, so that's this number here, 1.4 billion. Then in that same report they were expecting 8.5 million to be the total fleet of electric vehicles, but in fact that number ended up being 10 million, and they were expecting that fleet to be 116 million for 2030, but as you see they were underestimating, so the real number, at least the new number for 2021, is going to be 145, and this is a number I'm going to use, which is coming from this report. Again, the same report as before. This is what they say: 145 million vehicles by 2030 are going to be electric, and this they were expecting to be 7% of the total fleet. And if we use the 1.4 million from the report before of Bloomberg, of course the number is going to be, electric vehicles to total fleet is going to be 10%, not 7. So what they are implying here is that this number, instead of being 1.4, is going to be 2.1 billion. Going from 1.2 billion to 2.1 billion in 10 years, it's like a 7% growth. And normally the fleet will grow at the same pace as GDP and population both together. So I don't think that the number here is, I mean, it looks like a bit rosy to me. But in any case, it's not going to affect what we want to achieve here, which is that sales will reach 25 million vehicles in 2030. And this is the number I'm using here, 25 million, which is the number we're going to focus in a minute. And now let me just show you the last piece of information, which is coming from Bloomberg. And this is what they were expecting the fleet of electric vehicles to be in a graphical form. So you see here by 2030, 28% of the vehicles was going to be electric. And this is the number I have here. So now let's focus on the deliveries from Tesla, which we already know these three, but this is my projections, and I'm starting with 50%. And I'm using a percentage here so that by the year 2030 they reach close to 20 million, which is what they are expecting. Okay, so now let's add these few more lines of information, including the simple average price, the Tesla market share, and the total electric vehicle market. So let's focus here on Tesla market share now. So the Tesla market share I compute is the number of deliveries from Tesla divided by the number of sales of electric vehicles. I know that these deliveries and sales is not exactly the same, but it's very close. So we are going to use this. So Tesla had a 14% based on these numbers of market share in 2021. So let's see what happens. If they want to sell 20 million vehicles by 2030, they will have to, and let's assume that this 25 million of sales that the International Energy Agency is forecasting is right, then Tesla will have to sell 76% of the cars. So the market share will have to go to 76%. That I think is not possible. So there's something wrong in these numbers. Either this 25 is too low or this 20 million is too high. Even if this 25, let's assume that we want Tesla to be 20% of market share here. And if they are building 20 million and they are 20%, that means that the sales of vehicles by 2030 will have to be 100 million. So 20 is 20% of 100. So 100 million. Imagine by 2030 the world producing 100 million vehicles, electric vehicles. Only in a matter of 10 years, we'll have to go from 6 million to 100 million. New plants, all of them, because there is no expansion here. Very few is going to be coming from expansions. Most of that is going to be coming from either retrofitting plants built for combustion engines, which is very hard, or from building new plants. So I think that it's not possible, because then we have to build batteries as well, not only cars. I don't think this is possible in 10 years. So I don't think that this number can be 100 million. If that number cannot be 100 million, and Tesla cannot have a share higher than 20%, let's say, of the market, then I don't think that they could achieve this. But this is just, something to think about. I'm going to use my projections using this number for the time being. One other information here that we have is that from the Market Research Future, they said that the electric vehicle market is going to be worth 1 trillion by 2030. And in my calculations, you see, is roughly in the same ballpark than this report. And what I did here is I came with a simple average price for Tesla, and I'm going to use that as the average price for the industry. And this number is going to go down every year up to 38,000 per car, average price. And this is because the mix, not because the prices will drop per vehicle or I mean per model, but it's because the mix is going to change. And as I said at the beginning, they are planning to build this Model 2, which is going to be a cheaper vehicle. And if they want to sell 20 million, they have to sell cheaper cars. You cannot sell 20 million of premium priced cars. So in essence, the price average will have to come down. So this is what I did. It could be right or wrong, but at least this projection. And if we use that and multiply this by the number of sales, here 25 million, we get the market. So 25 million cars sold at 40,000 average approximately gives you $1 trillion of sales on electric vehicles per year on 2030. So that's another piece of information we have. And this is some interesting thing I want to show you now. Tesla 936, which is this same number here, and then all these others sold 2,300, and then the rest approximately 3 million. So let's assume that this is true, and we go to 76%, Tesla selling 20 million. So the difference between the 20 million that Tesla sells and the 25 million 0.8 that the whole market sells is 5 million, almost 6 million. So this 6 million will have to come from all these others, which means they will have to grow their sales between 2021 and 2030 by 0, because they are already selling 5.5 million, all of them. This is not possible from this perspective either. From the competitor's perspective is not possible from my point of view. So there's something wrong here, but it's not possible to reach 20 million sales. I don't know. But Elon Musk has proved wrong many people many times over and over. So probably he's going to prove me wrong. That's very probable. We'll see. If I'm alive in 10 years, it would be interesting to see this video again and see what happened. It is very possible that I proved wrong, like this logical thought guy who back in 2014, thinking very logically, said that 500,000 cars in 2020 are absurd. Of course, they delivered exactly that. And in 2021, 1 million, double this. So probably I'll be like this guy. Okay, so let's keep going. With all that information, I can compute the revenues. I have here the historical revenues and my projections, and the automotive revenues are coming from the calculation I just showed you, meaning multiplying the simple average times the deliveries, and this is this number here. And then I am adding service and others and energy, generation and storage, which I'm taking just from what they have been selling in 2021, and I'm growing that at quite substantial numbers, and because they grew quite fast in 2021, so I'm assuming they will keep growing quite fast and even keep growing fast in a decade. So even so, that adds 130 billion roughly in sales in 2031, and the rest is all coming from the calculation I just made for the cars. So this is my revenues. Now that I put that into my income statement, this is the projections. And in terms of gross profit and operating profit margins, what I'm using, let's go to the operating margin, which is the most important. 12% is what they achieved in 2021, and I'm going all the way up to 14% by December 2031. EBITDA for 2031, $200 billion. A small number. Let's go to the cash flow statement, and this is the historical one, and this is are my projections, and you see they are increasing the free cash flow quite fast, and I'm going to keep increasing free cash flow quite fast and also reducing capital expenditures to revenues. So that brings us to our fair value. So using EBITDA of 192 and free cash flow of 86, these ratios, and then gives me this enterprise value, debt, I'm not assuming much, so market cap and enterprise value are similar. Weighted average stocks outstanding are going to grow, and this is the price that we achieved by 2031 with this calculation. And I make the average of these two, so this 1.7 thousand is going to be the target price. If I use that in this cash flow, meaning selling it at this price in 2031 and buying it at the price of a couple of days ago, with this adjusted per share free cash flow, that cash flow, which is the cash flow of the investor, is going to be yielding this IRR. In this case, buying it at 802, 11%. My target IRR is 10% normally, so that means that for me the fair value using these assumptions, which are quite rosy in terms of deliveries, 20 million deliveries by 2030, it's slightly undervalued. If I can buy it at 800, is slightly undervalued. It's not a huge undervaluation. So this is what I call the bull case. Let me show you now what I call the base case. And so let's go back to the projections of deliveries, and what I'm going to do in here is reach a level so that the total market share, and assuming the same 25 million in sales, the total market share goes to 40%, which is still a challenge, but something more, let's say, attainable, I think. So that brings me to 10 million in sales or in deliveries by 2030 for Tesla. So half of what we had before. So when I put that into the model, then this is the income statement. Instead of 192, the EBITDA is going to be 100. I don't change anything in terms of the operating margin or the gross margin. And then I do the same for the free cash flow. Of course, I have to reduce the growth of the free cash flow because less sales, less net income, and less free cash flow growth as well. And we'll get from 86, now it's going to be 53. So then our fair value calculation for the base case is going to be using these new numbers, same ratio and same weighted average stocks outstanding. My target price is going to be 984 for 2031. So then I put that into this cash flow for the investor, buying it at 802, selling it at 984, and using this free cash flow adjusted, which is different than before. It gives me this IRR. If I buy it at 802, it's going to be only 5%, So to go all the way to 10%, the price will have to come to 545. So roughly 70% of what's trading today or a few days ago. So this is going to be my fair value in this base case. So there we have it, the fair value and IRR in both the cases, the bull case and the base case. If you ask me, this is the one I'm going to use for my investments. So that means Tesla is a company I like. It has all the attributes I am looking for in terms of quality, and you can see that in my previous video. But this is one of those companies where the price has never been there for me. It's always been overvalued by a large chunk. And of course I have made a mistake, because if I have bought this 3-4 years ago, when I thought that it was overvalued, I have always thought that it's overvalued, and I could have made maybe 20 times or 15 times my money if I had invested in such an overvalued company. But this is the way I work. I want the facts. Probably the facts are not perfectly right all the time, but like in this case probably. But I wouldn't invest at a slight margin like this one, assuming that they sell 20 million vehicles, and then I would say, okay, everything has to go perfectly right for Tesla for me to make 10% or 11% if I buy it at 802. There's not enough margin for me. This would be more a proposition that I'm willing to take. So this is it. And of course, between this base case and this bull case, there's so many different factors, that can bring the base case to the bull case. For example, sales. As I said, they could sell more software. They could sell other products like insurance. Energy and storage could be a larger business than what I'm thinking. Of course, they will have the capacity constraints and also competition that's going to be there. It's not going to go away. In terms of margins, scale, of course, can be improving margins better than what I'm expecting. Also software. Innovation, for example, batteries of lithium, iron and phosphate, which is a new technology, much cheaper. Probably this will impact margins quite a lot. Or producing more in China. Of course, the China plant has a very high efficiency, and probably if they expand their production in China, they could improve margins more than what I am expecting. But also the investments are negative. The supply chain issues it may stay for longer, and the price mix that I mentioned. So coming from here to here, there could be all these things, or even coming from here to here. So it's as usual. It's not easy. It's most an art than anything else. This is a mathematical exercise, and you can take it. I mean, many different people will take this same information and use it in different ways. That's why we have people that is heavily invested in Tesla, and some others like me that are not in the sidelines, and some others that are even shorting Tesla. There aren't many now, I think, but they used to be. they are tired of losing money. Poor guys. I mean, shorting is such a difficult business. Okay, guys, that's all. Thanks very much for watching, and I hope that you like this video. If you do, please give it a thumbs up to the channel, to the video, and subscribe to the channel. And I see you soon for another valuation video. Thanks very much for watching. Bye bye.